Yo, what's up, everybody? It's Monday, Memorial Day. 90 degrees here in Florida, and it's like late. It's 6:45. Yeah, 90 degrees Fahrenheit. So it was a nice, relaxing, hot day. That's why I'm kind of like that. So markets were closed today, but futures were up. Trump, he pulled another one of these Sunday night hatchet jobs on the shorts. Friday the market sold off, and then last night or yesterday afternoon, he said, well, he's going to give Europe an extension until he imposes the 50% tariffs. And that extension's until July 9th. And I think the 90-day suspension on those other tariffs, they're coming off on July 9th too. So, I mean, Trump loves to do this. He does the Sunday night hatchet job. I'm sure all of his insider team and his kids are making a fortune trading S&P futures. But anyway, that is what he does. So we had the market pop up, the announcement, and then of course that was so predictable because people jump on that stuff. Frankly, I don't think this bounce is going to last, and I'll tell you why. I don't know if I said this on Friday when I made my video, but the tariffs are really kicking in now. I mean, the numbers, they're pretty impressive, if that's even the right adjective, because impressive in a bad way, I think. We had last week a 16 billion inflow to the Treasury, tariffs. Right now, customs taxes are about 93 billion. That's up about 33 billion year over year. That's a big increase. That's like a 66% increase. And remember, we don't even have the full tariffs yet. Those are going to start happening in July. So that is a significant amount of fiscal drag. I mean, when you're talking about, when you look at these numbers, we're running at about a 25 billion per month of customs taxes. And it's incredible because when I look at net government transfers, that's the leading spending flows minus taxation, that's been shrinking, but in the last week, it actually kind of looked like it started to go back up again. Not a lot, but it looked like it was doing that. But I don't see how that's going to be sustainable with these tariffs because we're just in the very early stages. This is like, if I'm going to give you an analogy or an example, when the Fed started to raise interest rates, I was telling you guys, if you were following me at that time or if you were my subscriber, I was saying just wait and see how big these interest income transfers are going to get. They're going to blow people away. And sure enough, what is everybody talking about now? That interest payments by the government exceed the defense budget. Okay, it's over $1 trillion. And I said that was going to happen. I said it's going to take some time, but as the Fed increases interest rates, that's going to increase those interest income transfers into the economy. And I'm saying the same thing now with respect to these tariffs, only these are not transfers into the economy. These are transfers out of the economy. These are taxes. This is just flowing right to the black hole of the Treasury where it does nothing. It's gonna reduce net government transfers, or what all these monetarists, gold bug, hard money people call the deficit. So they're going to see the deficit going down, and they're going to be cheering, and they're going to be saying, oh, this is wonderful, and this is fantastic. And Trump is going to be saying, look at what I did. I'm bringing down the deficit. The tariffs are working. They're working for the government. They're not working for the economy, or they're not going to be working for the economy. Right now, even without that 90-day suspension coming off, You're looking at 300 billion a year of drain. Okay? That's not peanuts. Now, when that suspension comes off, and I don't know what kind of deals he's going to be working out ultimately with China and Europe, you could be looking at 5, 6, 700 billion in tariffs. Now, the cool thing would be because like he mentioned a couple of times, not recently, but he did mention that we can get rid of income taxes, individual income taxes. That would be amazing because individual income taxes, there's something like, I don't know, 1.2 trillion or something like that. I mean, the bulk of those taxes could be eliminated from the tariffs. Now, just think about what an incredible offset that would be and how it would make everybody's life so much nicer. But that was just talk. I don't see any, political movement in that direction. I don't see him pushing that idea anymore. But that would be a very cool thing. But I don't see that happening. I do not see that happening. I mean, he talked about it, but I don't see it happening. So we're left with, what are we left with? We're left with what I just told you, is these tariffs, they're taxes. And right now, I mean, what are we like, freaking not even a month into these things or a month into these things? And we're running at a rate of 300 billion a year now, 25 billion a month. And that's going to go up. So you talk about, stepping on the brakes. Something's got to give. I mean, we can't be dancing around here. Hey, the tariffs are working. Is it working for who? They're not working for us. They're not working for the economy. And Trump telling companies, hey, you better eat the price increases. Well, what's that going to do? That's going to lower their profits. And then they're going to have to cut costs because, these companies, like these big companies like Walmart and Apple and all these others, they got to report to Wall Street. They don't want to see their stock price go down. So they got to keep their profits high. So they're going to have to cut costs. And what's the easiest way for them to cut costs? They're going to lay people off. So either it's going to come in the form of higher prices for consumers, or it's going to come in the form of, lower corporate profits, which is going to be bad for the stock market, or it's going to come in the form of rising layoffs, which is going to be bad for the economy, which is going to be bad for the stock market. I don't see what everybody's cheering about, frankly. Now, if you look at sentiment right now, it's bullish. I mean, the AAII weekly sentiment survey last week flipped bullish for the first time in 4 months. And the put-call ratio is low. I mean, a low put-call ratio reflects optimism, bullish sentiment, whatever you want to call it. It's not nervousness. It's not fear. It's more a positive outlook. So you look at that, if you're going to look at that as a contrary indicator. So I think we're going to go down. I think the market's going to go down. And this whole thing with the bonds, at this point, it's really always the ball is in the Fed's court. And the thing that gets me about the Fed is all this talk for years we heard, we're going to be data dependent. We're going to follow the data. The data is going to give us direction in terms of what we're going to do on monetary policy. Inflation's been coming down, and Powell's been, not only has he been hawkish, I think he's been upping his hawkish rhetoric. Who knows? Maybe in the end he's going to be right, and maybe we're going to see inflation move up on these tariffs. But so far, this whole idea of data dependent and we're going to follow the data, that's just a bunch of bullshit. I mean, he's not doing that at all. He's not following the data at all. He's going the opposite direction. And I still think, and I've said this in the past, I think that he's got it out for Trump. He's got a vendetta against Trump. I mean, I don't half blame the guy. I mean, if the guy is being publicly criticized day in and day out by the president, And you could see that Powell has an ego. He's got a very big ego, because when the idea was floated that Trump wanted him out and wanted him to resign, and he was asked about that, Powell said just flat out, no, I'm not resigning, and he can't fire me. Boom, period. So I think he's got it out for him. And my other speculation was that Powell's running cover for some hedge funds that are short the bonds, because when his term as Fed chairman is up, I guarantee you he's going to go work for some hedge fund at a very, very high salary. All right, he'll work for Paul Tudor Jones, or he'll work for Gundlach, or he'll work for Druckenheimer, one of those guys, because they've been consistently bearish on bonds. And the Fed, Powell's been accommodating that position. So the payback, he'll get his payback when he gets a job from one of those guys. I guarantee it. I guarantee we'll see that. Anyway, I'm going to enjoy the rest of my Memorial Day. I don't think this rally is going to hold. I think you sell into this rally and see how it plays out. But I mean, $25 billion a month right now. And by the way, T-bill interest, and I said this last year, I said when the Fed starts cutting rates, the first thing you're going to see is the interest on T-bills going down. And that's already down $30 billion compared to last year. $30 billion. And the Fed stopped cutting rates. When did they stop cutting rates? Like last December, I think. They stopped cutting rates. Imagine if they kept on cutting rates. I mean, total interest income transfers would be negative year over year. Right now, they're still up. I think like about 30-something billion. But they would be up a lot. They would be down if the Fed kept on cutting rates, because T-bill interest is keeping overall total interest income transfers from really going much higher. Because T-bill interest transfers are going down. They're down 30 billion. That's not peanuts, man. That's not nothing. Anyway, that's it for today. Maybe I'll go fishing right now. We got some creeks not far from here. I'll get my rod and go see what I can catch. A friend of mine went the other day, he caught some local fish. So anyway, enjoy the rest of the day and see you guys tomorrow. Don't forget, please like and subscribe. And go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. See you tomorrow. Bye.